Bill Beauclair, Managing Director of CRE in Paris, France. Well, France, or the Paris region, is the second largest market in the world, so all our figures are huge. We've had a very, very buoyant activity for the last 3 or 4 years. We have, first of all, we have the a very, very big market of about 54 million square meters, or 540 million square feet of offices, and about 5% of that is leased every year. That's a very high percentage, and that comes to a figure of about 2.5, 2.6 million. So it's very active. We benefit from, after the 2008 global meltdown, we had very little development activity, so we have not built very much in the last 10 years. Therefore, we have incredibly low vacancy rates. So at the moment, the centre of Paris has a vacancy rate of in the order of 2.6%. There's no stock available, whether you want new, old, or something in the middle. And that's actually a buoyant time to be a landlord. That's turning into some new developments, but we've certainly, after a number of years of seeing no rental growth, we're seeing enormous rental growth from this new demand. So we have about a third of our new stock is being taken up by the WeWork and the other companies like that, and they're pushing for it. So we're back up now to historic high rents of about 850 euros per square meter per annum in Paris offices. Well, it's very linked to the French economy, and we haven't been doing that well. We took about 4 years longer to get out of the recession than, say, Great Britain or America. So we've had a more of a stagnant economy. We've got very modest rates, and that's reflected in our turnover. On top of that, we have all the new disruptions to the market. So we have seen a growing dominance from Amazon, but also its 2 or 3 French counterparts, Cdiscount and Fnac and other groups like that. So we have a reduced activity on main retailers, our Carrefour and Champion and all the other big boxes. But they are still keeping some sort of profit. We've seen certain high streets affected, but not in the same way as we here in England. We have a lot of, we do have some vacant shops, but there's been, the boost has been enormously the tourism and luxury world. So we find that irrespective of a downturn in some parts of the economy, we've had ever-growing rents and demand for prime retail in the Champs-Élysées. When you come out to other big boxes, or you're out into strip malls in the countryside, that has seen a downturn. The French are shopping in a different manner. Certainly the youth are shopping there. So there is still reasonable demand for those that are well placed and well designed. But what happens with us is we've got the second largest stock of retail space in Europe, and beaten only by Sweden. And so it's a lot of old stuff in the wrong place, and it's empty. But that's not quite the same sign as we hear in America, where you have your 30-year-old shopping malls with Macy's have left and it's shut, and it's next to a big city. We don't really have something as dramatic as that in France. Well, there is a very active investment market. So we got involved on the sale of a fantastic pair of towers built by Trammell Crow, the Texan developer, in 1976. They're called the Tour Mercurial in an eastern suburb of Paris. So it was selling something very prestigious but empty in a certain amount of difficulty, and we found ourselves using our resources within Corfax. So we put it out certainly to our European network. We had a range of interests. First of all, we sourced a series of clients from London that looked at it but didn't go ahead. We went back to Susan Singer, who is based in Texas and actually knows the Trammell Crow family that built it in 1976, to ask if by any chance they would like to buy it back, because the discounting price is very high. They sadly said no. And we also worked with, at that time, Scott Bloom, who was based in Helmsley Spear in New York. So they came up with a few clients. Now, as it happens, the end buyer was an Israeli trader who bought it for a fairly reasonable price. It was being sold on behalf of a British bank, or a British and American bank that were the unfortunate default. But we were able to give a clear marketing push through the use of the Corfac network investment across Europe, and which impressed the client and showed that we had reach beyond just France. Well, we work on different elements. We're asset managers for certain clients, and in that the hardest been is following the recession. We worked for several years to renegotiate the debt on a property that was fairly new, that belonged to some Irish clients, at a 120,000 square feet office building, new office building in the suburbs of Paris, and. What I was going to refer to was actually the renegotiation of the debt, which is now leading to today in 2019 to the sale of the building. But this all happened in 2016 when we armed ourselves up with lawyers, and we were acting against the lender, which was now a failed bank, which was effectively the Dutch government, and it was a matter of showing which lawyers are the biggest teeth. And we spent a lot of money on real money on one of the largest firms in Paris, a French firm, and we were able to make a massive discount. What the figures are, we had a 46 million euro loan, and by showing that we could default, we could trash the building, depreciate its value. It's very different to the Anglo-Saxon world, where the law protects the borrower, the law protects the lender, I should say. So we managed to negotiate the debt down to 23 million. We paid back that debt at 23 million, which allowed this consortium of private investors to survive. Otherwise, they'd lost all of their money. And so now we're coming out of that tunnel 3 years later, and they will make a very small amount of profit on their equity. But it was a very moving moment, because we could have had a group of about 100 investors lose all their clothes.